What else do you have to do? You gotta just start investing. Welcome to the $1 Million Challenge.
Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. In today's video, we are going to talk about my IRA. Last year, I did a video. You can check out that video right here. I talk about my set it and forget it approach to my IRA. And last year, we must say that we had a lot of turmoil in the market. The market was so crazy last year. You guys stay tuned. I'll be getting back into my dividend and my stock side of investing, which I'm going to be talking about more. Last year was a little bit crazy in the market, so I would love to be able to update you on how this portfolio performed last year. The video got some sort of engagement, maybe around 100, just a little bit of engagement. I think the portfolio performed really well, and I want to share the portfolio with you. So before we go check it out, if you like my content here and you like what I've been doing, being transparent, showing you what I'm doing to get to this goal right here, which is making $1 million a year. Before we get to making $1 million a year, we got to be able to have $1 million net worth, right? So there's $1 million everything on this channel. Anyways, so thank you very much for watching. If you take the time to subscribe, I would appreciate it. So without taking too long, let's get right to it.
Hello everyone, welcome to the desktop. So in today's video, we are going to basically just look over my IRA. Okay, I set up an IRA last year, like I said earlier on, and I just want to bring you back to the performance and just share the performance with you. Now, last year has been a horrible year in the market. It really was. Like, stocks was down about 90% last year. So I want to show you how much the portfolio has recovered. So without taking too long here, let's get right into the portfolio and just look everything over and see how it just performed. It hasn't really done too bad compared to how the market has been. Now, this is my IRA. IRA basically means that you have a limit that you can put on there. The government put a limit that you can put. You can only put $6,000 if you're under 65, and you can put $7,000 if you're over 65. Now, the money that you have in here grows tax free. Let me repeat that. The money that you have in your IRA grows tax free. That is a big deal. Okay, that's a big deal because if you're able to start this or if your parents were really smart and they started this for you when you were 11 years old, or like when you were 5 years old, or when you were 1 year old, this would grow so much that you, by the time you're 21 or 41 or 61, I mean, you're only allowed to touch it when you get to, I think, 65. But once you get to that age, if let's say you have time to start, this IRA is a good thing that I think most people and most parents should make an effort to start for their kids. Well, anyways, I started mine when I was 32, so it's not too late to start yours if you haven't. Not financial advice. Of course, my videos are never financial advice. Okay, disclaimer, my videos are not financial advice. They are just me showing you what I'm doing with my money. So please don't take it as financial advice, because I'm not a financial advisor. I'm not your financial advisor. I cannot tell you that. So please do your own research as to what you want to invest in. Anyway, so let's check this out. I got $6,237 in here. Now let's try to go back all time. I'm gonna go down to today so we can see the performance first, right? So let's see all time. If you go to year to date here, basically all time year to date, same thing. I mean, all time 1 year is same thing. And then if we go to year to date, that means from the beginning of this year, 2023. You guys see here, January 4th, 2023. We have, this is the performance here. It has gone up 10%. And the last 3 months, which is from November 8th, it has gone up a lot by 10%, and the last month, it has gone up by 8%, and if the last week it has gone up by 2%, and today it's up by almost 1%. No dividend. Now their performance here is not the fanciest thing that I want to show you guys. Definitely not the fanciest thing. But what I want to show you guys here is what I have here, the breakdown. So if I go to 1 year, I think this will paint a very accurate picture of what's going on here. So I have this section here which I call set it and forget it, and it's basically a collection of index funds that are supposed to be like all weather, right? Because basically like trying to cover a huge part of the world tech. All right, so we have here growth ETF is the Vanguard growth ETF, and we have the tech companies here, which is QQQ. We have the S&P 500, which is obviously the staple, the top, always constant, the top 500 companies. So if one company is not performing well, they're going to drop that company and add another one. So the top 500 company always stays here. And then we have these funds that just invest in the total stock market, total US stock market. You put money in and they basically invest in the total US stock market. So that is very stable. And then you have here, which you have the total world stock market. I don't know how they were able to put these funds together, but this is a good fund, right? Total world stock market. That is a good fund. That's, to me, it sounds like a good fund. Anyways, so we have here a good fund. Sound like a good fund. Also, we have here the emerging markets, right? The emerging markets are the Asian markets, African markets, South American markets. So that is the emerging markets. And then we have the Russell 2000. So that's combination of all the smaller companies. 2000 of all the smaller companies combined into one. Now if you take a look at just a year performance here, right? So if you take a quick look here at the performance of each and every one of these companies, we can see that they have done really well in the past year, right? In the past year they've done well. They haven't like dropped crazily, and it hasn't like gone up too much neither. It's just steady, 8%. Paid a $25 dividend, and this is a set it and forget it portfolio. So this is average. This is like your average return. It's not going to be anything spectacular. This is just an average return. Now, if I compare a few things here, right? We look at all of this, right? This is a basket of stock that, in my opinion, that you don't have to worry about. Anyways, what I wanted to do with this fund is to just make sure that when I put money in here, I don't ever want to worry about, is it going up, is it going down, what's going on with it, everything like that. I don't ever want to worry about that. I just want to worry about, okay, just put the money in, let it do its thing, and just worry about being able to put in money on a regular basis. So that is the main thing with this fund right here, with this section. This is my set it and forget it, and I purposely named it that because that's what it is. It's set it and forget it. So let's take a look at the other section of my monthly dividend IRA. So now we are going to look at the monthly section, the monthly income section of dividend, right? Now, as you guys can see, this one is geared towards making money. This section made way more money than the previous section. This section here made 60 something, $66, and the previous section, which is the set it and forget it section, this one made 25, right? So this will not grow as fast, but it's one of the safest ways to invest in the stock market. I just stick with it, right? This one made 66 last year, and it has grown steadily, 6%, even though the market was down quite a lot. But these stocks, these ETFs here, were able to weather the storm, and I think they did really well. They did really well. If you look, this one is up 10%, 6%, 9%, 6%, you know, 7%, 1, 9, 2. So they've done average. They haven't dropped like crazy, just like the rest of the market, and they haven't gone up like crazy. Stay tuned for my dividend update, because I'm gonna do my dividend update pretty soon. And with that dividend update, we will be able to go through my main portfolio. Okay, this is just my smaller portfolio. It's an IRA. This is a retirement portfolio. So let's stay tuned for that. That is coming up pretty soon. With this one, it's done well. And this one I primarily get towards making money, right? Generating income on a monthly basis. That is what this is. In my other account, I have a bigger account in my other account. So that one makes a lot more money. So just stay tuned for that. That is coming. But here, this is a quick breakdown of like the dividend that the monthly income section has generated, right? It's pretty cool. Like for the year, right? For the year, it generated $66, and we didn't have to do anything for this money. This is the power of the stock market. I don't do anything but just put a tiny little bit of money here. I put $500 a month, and that equals the $6,000 a year that you're allowed to put in. And I make sure every month, no matter what I do, I put in that money and maximize the $6,000 that you are allowed to put in. Let's take a look at the next one. Now, this one here is from my previous IRA that I had on Stash, and I'm holding on to Stash because of one company that is in there, Tesla. The statistics, the numbers, the performance numbers on what I have on Stash is quite crazy, right? So I want to keep that for a minute to see how it goes. So, but these are some of the companies that I have in Stash. I created a version here on M1 because eventually I'm going to transfer the stock over from the Stash IRA, which is right up here. Stash Invest IRA. I'm going to transfer it over to M1 here. So that most likely will go under this sections here. But here are some of the companies that I have on Stash. Now, this is quite a lot. And when I was starting to invest, I just basically selected companies that I know, and I know that they're going to be here for a long time. And then I also selected some ETFs. You can see Total World Stock Market. I have it here again, right? I selected some ETFs and just, you know, make sure that I have a balanced portfolio, right? Robotics, SPHD, you know, just your regular what we already have, but I make sure that I have a balanced portfolio here. Now, if we come up and take a look up here, relatively the same, like 6%. This don't give that much dividend, so obviously I don't have that much in it, but even if I do, it probably won't give that much dividend because it probably has a very high expense ratio. So as you guys can see, this performance of this IRA here, and you can see the return based on $100, right? The market gone down quite a lot to the point where it dropped to 77 and it has recovered a little bit. So if we look here, the dividend is 1%. It's obviously not much because we have Tesla that has a 35% weighting, and you don't pay dividend. Apple pays. Disney has lowered the dividend. Bank of America pays. Amazon don't. Walmart pays, and all this ETF pays. So it's not going to be that much. And I'm also very happy that I use Vanguard for the most part because the expense ratio is very low. I thought it was going to be high because of all the dividends, but the expense ratio is so low, very, very low. But yeah, performance for year to date on this side, I don't know why. If you look at 3 years, if you look at 5 years, 30% in the last week, that's high. And then the last year is when it remains the same. But anyways, returns since May, that's what this one is given. But this is besides the point. I just wanted to show you the most important point here, which is the dividend yield and the expense ratio. The expense ratio surprisingly is quite low. So that is pretty much it for this video. This segment here, I'm only going to do it once a year. There's nothing really to talk about here. This is a slow and steady, boring way to invest, but it obviously works. It obviously works. Even though the market has gone down so much this year, you know, we've had situations where we still made pretty good gains. You know, we made pretty good gains overall. And if I go to all times, the portfolio is tracking along as it should, moving at the average pace. Okay, that's the whole point with this kind of portfolio: slow and steady at the average pace, and everything will be all right. So again, thank you very much for watching today's video. I really appreciate you. If you find value in this video, please subscribe. Please subscribe, because like the $1 million challenge is gonna happen, you know, and it's good for you to see how someone just like you, working a 9 to 5, trying to build, trying to grow, investing. Well, I don't work a 9 to 5 because I don't work with nobody. I work a 9 to 5 for myself, but trying to build, trying to grow. So I would urge you to subscribe and follow along in the journey. Those of you that are here, I appreciate you. Until next time, see you later. Love you all.